I talk about currency life cycles all the time because there are typical repeatable patterns around that. And so we are now entering, and actually we started entering it in 2015, a different phase in the currency's life. So let me just take this through to you, because in the beginning, gold was pegged, it was a 20th of an ounce to $1, but it was pegged on a 1-to-1 ratio. Then, when they brought in and legalized the Federal Reserve, that shifted from a 1-to-1 to a 2.4-to-1, which means that the Federal Reserve could now print $2.4 for every 20th of an ounce of gold held in deep storage. In 1933, that peg shifted again to a 4-to-1. And of course, they took away a citizen's ability to convert dollars back into gold. Now, the reason why this is significant, and we're going to come back to this because this is such an important concept for you guys to understand, is that as long as we were on a gold standard and the citizens had the right to redeem dollar bills, well, it doesn't matter what it is really, dollar bills for gold, it put the power in the hands of the public. Because any government, if you didn't like what they were doing, you just went into the bank with one of these and walked out with one of these. Oops, where's that camera? With one of those. And so that created restrictions around a government, what a government could do. All right, well, once the public could no longer do that, well, then the world, as you know, we went into World War II, etc. And in Bretton Woods, like I said earlier, the world agreed to peg their currencies to the US dollar that was pegged to gold at a $35 an ounce price. But of course, that didn't last very long. In 1971, and actually as the US went into the Vietnam War, those pegs were breaking because we were printing a lot more money, inflating, shipping out inflation to the global economies. And so those pegs broke. And at that point, governments could no longer convert their dollars into gold either. Of course, there was not that much gold left in the system. At that point, actually less in the U.S. than prior to the confiscation in 1933. This was a bit of a problem. And that depegging, where all the currencies were free floating, lasted until early 2000. Now you can see that this is a relative performance chart between the US dollar and the euro dollar, and the euro, and they absolutely mirror each other. And in the early mid-2000s, emerging currencies then pegged themselves either to the US dollar or the euro. So that's why today there's such a big problem with those emerging markets that are pegged to the euro or even pegged to the dollar, either one. Because as we keep hearing about such a strong dollar, that has an impact, because in order to maintain the peg, you have to sell or buy reserves to maintain that peg, that connection exactly or within a narrow range to either the dollar or the euro. Well, in 2015, things started to break down. Pegs started to break down with the Swiss surprise, where they were pegged to the euro, and they kept promising that it was the most important thing, the most important peg. They were going to remain that peg, and then all of a sudden they didn't. We're going to talk a little bit more about that in a little bit. And now we're hearing recently where Mexico is thinking about depegging from the dollar, from the US dollar. So even though it's been a few years in between, really what actually the globe learned, and particularly central banks, is that when it comes down to it, it's every central bank for itself. And the U.S. has been guiding people and getting really, really ticked off. And you ask me how long this can last. It can last until confidence in the system, central banks, governments, and the currency is gone. And right now, we are actually sitting at the lowest consumer confidence level, like since they started tracking it, ever. 1980 was actually when it was not even as low as this. So we are getting to that point. 1980 was the kickoff of the debt-based system. 70s and 80s was the kickoff. Now we are at the end. This is not a good place to be unless you have protection. Real money. That's what has withstood the test of time. So what you really need to know is that we are in the late stage. While I can't tell you it's Tuesday morning at 8:35, it very well could be. The world is very fragile. As we're hearing from everybody, the IMF, the BIS, even, goodness gracious, even Jamie Dimon, who says we'll be in a recession within the next 6 to 9 months. It's going to be worse than a recession. Will the Fed pivot? Because that's all about that confidence and that credibility. We're at the end, and I really hope that you can see that. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.